Okay, we didn't talk about this much, but if you get a chance, the real book that all of this part 3 is about is called Circular 230. And if you need, I don't think they used to have a book that they made and you could get. Now all you do is just download it from the internet. And it's whatever, that's the real rules that all of part 3 are about. So we're going to talk about chapter 3. Different than all the other two, this one is mostly read the chapter, just learn it. And a lot of the stuff you're going to learn, you're only going to learn for the test. When we talk about, get to the end of chapter 4, it's about the courts and all that stuff. I have never gone to court. You cannot, one of the things they're going to talk about is that we as enrolled agents or CPAs can't go to court. We can't go to tax court. Only lawyers, or you have to take a special test to be admitted to court, tax court. And I saw it once where I took one course in it and go, no, this isn't for me. I didn't really, that's not my kind of what I want to do. Well, there's my picture. I don't know if it's working or not. Ah, oh no. Sit there, I'll get it. Oh, that was actually my fault. Okay. Okay, so we're going to talk about representation. Representation, it's act performed on behalf of the taxpayer by a representative. Who can do this? Usually, it's lawyers, CPAs, enrolled agents, enrolled actuaries, or enrolled pension plan guys, whatever you call those. Also, you have special privileges. Anybody, there's a bunch of people that can do it. You can do it for your family. You can do it for yourself. Anybody can represent themselves. Anybody can, immediate member of your family. An employee for a corporation can represent that corporation as long as they're a full-time employee. Who else have we left out? If you're a partnership, the tax partner can represent the partnership. Okay, and the guys that I like least, AFS, something or another initial guys, if they had prepared the tax and passed the test that year, they can represent their clients in front of the IRS for examination. They can't do anything else. Okay? They will, for some reason, the IRS likes that designation, and there's a push in Congress. This is not part of the class. There's a push in Congress right now to make all tax preparers have to take tests, like the EA test. Like you would have to take a simple version of Part 1. So everybody was going to have to be up to the level of an EA, or Part 1 of being an EA. And there would probably be a hybrid that would be the easy parts of individual tax preparation and some of this about representation. And they're going to make you know the rules and how to make sure that you know about the penalties. Okay, general power of attorney, okay, is your attorney in fact. You're authorized to perform all acts the taxpayer can perform. Durable power of attorney will continue. Okay, the power of attorney specifies the appointment of attorney in fact, but they can only do certain things. I'm going over these because this might be, some of these might be questions. Continue. Okay, power of attorneys for tax people. When do they continue? They continue, so you get a power of attorney at 2848 and you're helping some client. He gets killed in a car wreck. Boom, your power of attorney is over. It continues till he dies or becomes incompetent. If he becomes demented, gets Alzheimer's, something like that, then you can't continue to be represent him unless you get a new power of attorney from whoever the court appoints to be his guardian. That might be on there. Okay. Recognize representatives, as we said, attorneys, CPAs, enrolled agents. Okay, they're the ones that get full representation. Temporary representation, any individual who's granted temporary recognition as an enrolled agent by the director of practice. I've never heard of that happening. It's there for the test. So the director can actually go, Bay, I've given you permission to represent this guy, and you can. It doesn't happen much. Okay? So the annual filing season program, AFSP, which for some reason I've got something in my brain that won't let me remember that, AFSP. So if they sign a return and they have taken the test, they can represent you before the revenue agents, the exam people. That's all they can do. Okay? Sign and return. The filing of a power of attorney does not recognize you to file somebody's tax return. But if you get specific authorization on the 2848 and it's not against the law, you can get permission where you can sign a tax return for somebody. And depending on who at the state you talk to, some of them let you do it and some of them don't. I had one, I don't know if what department she was, she let me sign the GE tax returns for a client multi-years because she wanted them. But I had another lady just recently going, my client's in California, he's not going to be back. He actually just called me today. This was 2 months ago that I talked to her. And she goes, no, it has to be a real signature. So I go, okay, he'll be back in a couple months. Good luck. And so now we're going to get it fixed. Unfortunately, he shows up the last week. I don't know if you guys are swamped, but I've been swamped. That's just the way it is. Okay, so situation in which the power of attorney is not needed. You don't need it to prepare somebody's tax return. You don't need it just to send in documentations. These are kinds of questions they ask every test. You don't need it if all you're doing is providing information for the taxpayer. So you did the tax return and all you're doing is just telling the IRS people what you did. Well, you don't need to have a power of attorney to do that. Okay. And as I've said, a power of attorney doesn't give you the right to represent anybody in the front of the tax court. Who can be admitted to practice in front of the tax court? Whoever the tax court lets. But normally it's a lawyer. Anybody else, you've got to take a test before they're probably going to let you practice. But they get to choose who they want to let practice. And I think lawyers always get to. Okay, so what power of attorney? Normally we use it's a form called 2848, but they can use a substitute as long as it has all the same information. So if they don't have a form 2848, well, they can go on their computer and go to irs.gov and print one out and then fill it out. But if they don't want to do that, they just want to take a sheet of paper they gotta get the same information. But if they don't fill out the if they don't go make a copy of the 2848, how are they gonna know they got the right information? Just saying. Okay, so if you fill out a power of attorney, it gets accepted by the IRS. So generally, if you're a lawyer, CPA, enrolled agent, you could do anything that the taxpayer could do. You can talk to the IRS about his examination, about appeals. You can do collections. You can sign documents. You can sign waivers. Okay. These are all somewhere in here real quick. So what can you do? Represent the taxpayer at a conference. File a written response to the IRS. Sign a consent or an extension. Those you need to know, they're going to ask you that question probably. Declaration of a representative states the following. You got to know this one. So number 9 and number 10, you kind of just pretty much need to know. I'm not currently suspended. Yeah, they kind of want to know if you're like been suspended or you're not supposed to be in there talking to them. I am subject to the regulations contained in the Circular 230, this little book, and you've got to say, yes, I understand these regulations, and I will abide by them. I'm authorized to represent the taxpayer, identified in Part 1 of the POA, and I am one of the individuals described in 26 CFR, blah, 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 which means I'm a lawyer, CPA, or enrolled agent, or one of the other guys. Tax return and tax return information are confidential and generally not subject to disclosure. I sure hope everybody in here already knows that one. Okay, so disclosure of return information is permitted to when? Probably to the IRS if they ask for it. A person designated by the taxpayer, congressional committees, state tax offices, other certain persons. Oh,
Sorry.
thought somebody was shooting at us. Luckily, we're not in Texas.
Try to be quiet. That was really quiet.
What was it that happened in Texas? This is all. Somebody, you know how those little plastic things can make popping sounds?
Yeah.
Somebody did that, and 2 or 3 people pulled the guns
Oh,
in a store somewhere.
Oh my God.
Well, better to be safe than sorry. Okay. Other than a power of attorney, 2848 is a tax information authorizations. Even if you're not CPA, enrolled agent, or lawyer, you can get a tax information authorization. And what does that let you do? That means you can get information and have the IRS send you the information. Okay?
Would that be a tax transfer?
Yes. You can receive or inspect confidential tax information on the behalf of the taxpayer, unless he's also filed a POA with somebody. POAs take precedent over them. Now, we'll get to that. But if I have a power of attorney and my goofball client has more than one person representative, and that he goes to the other person, let's say I'm doing the 2018 tax return, I got a POA for 18. But somebody did his 2016 and 17. And he goes back to that guy to get that one fixed. He fills out a power of attorney for that guy. Well, a new power of attorney voids the old one. That's also a question they're going to ask. So how would you do it? If you fill out a new one, that voids the old one. Or if you don't want anybody to have power of attorney, you take the power of attorney that's in force, you write revoke on the top of the paper, sign your name again and date it, send that in to the IRS, and that revokes everybody's power of attorney. We'll probably go through that. But that's a way that if you don't, let's say you didn't keep all your power of attorneys. I've gotten probably over 100. I might still have close to that many. I have a stack this thick. Go ahead.
But it's only for the period and the year that's stated on the power of attorney, right?
Yeah, but I go ahead and enlarge those periods sometimes. Okay, we're gonna get into another rule. You can only go 3 years in front. So if on January 1st, I want to make a power of attorney, I can go 3 years forward. So it's January 1st of 2019, I can go 20, 21, 22, and I think that's it. So I can make it go for 3 years in advance, but that's as far as I can go. If you don't do it the right way, I think they kick them out and make you do it again.
They do. They do.
You know that for a fact, do you?
Yes, I do.
And if you don't have, say, owner or member or whatever on that line, they won't find it. For the tax.
That only applies, member, if you've got an S corp. Partner, if you're a partnership. I'm not sure what you'd have to have. Maybe I'm a vice president if it was a corporation, president if it's a corporation. If it's an individual, you don't have to put anything on that line, it doesn't matter. If you're doing it for your relative that passed away and you got, what is that other form called, 56 or something? Then I'm not sure what you gotta put. Administrative? Okay, anyway, so 8829, it works sort of like a power of attorney, not as powerful. Okay?
If you sign as power of attorney, are you liable for any taxes or penalties or?
No. You wouldn't get anybody to sign a power of attorney.
Right.
Because every time you're doing this, most of the people you're doing it for owe a lot of money, or at least in my case. They owe money. They want me to go find out, they want me to go get their transcripts, or want to go see their old tax returns, find out how much they owe. They want me to go get them an installment agreement, or
Abatement.
an abatement. We're going to talk about abatements. I got something I need to. It's a good trick. If you don't know about first time abatements, it's really good.
It is, yeah.
So if you sign the form, the 1040, you're still not liable to taxpayers.
Yes,
Right?
that's right. Just because you're boy, that would be crummy, wouldn't it? If you sign somebody's tax return and you gotta pay the taxes, you wouldn't be signing anybody's tax return if they owe money. And that would knock out a lot of Schedule Cs. Because what if they go, oh yeah, they come in with a piece of paper, it's got all their expenses on it, and go, I got the receipts to back all this up. Well, are you gonna sign that tax return? Not if I'm going to have to pay his taxes if he's lying. But that's my personal opinion. Okay, does everybody know what a central authorization file is?
What page are you on?
72. Okay. The reason is that they have a central place for the IRS, for everybody that has power of attorneys or an 8821. They put them all in they call it a CAF file, Central Authorization File. They all put them in the CAF file. So then, say that you came in a week ago and you talked to somebody from the IRS and you faxed in your power of attorney. Well, so you're talking to somebody different. You might have been talking to somebody in Buffalo or Holtzville or outside of Philadelphia somewhere. And today you're talking to somebody in Oregon. So the only way is that they have a central place that all of this information is stored. And so they can go in and get your CAF file number, and pretty much they do that right at the beginning of the conversation, and go, do you have authorization? And if you go, yes, I've got it, I put it in a week ago. If it hadn't gotten processed, they make you send it to them right then. It takes a week to 10 days. Has anybody had it shorter than a week?
No. Paper file?
Oh, no, when you send in your power of attorney,
Like
the
that?
way you send it in, you can fax it in. There's a central fax number for your CAF. Or you're gonna be able to use, when you become enrolled agents, you'll be able to use the priority hotline. So it's a separate number, and you go that number, and you get through the line really fast. It's great. And if you do it in the afternoon, after all the people on the East Coast, you're gonna be the best thing that I'm gonna teach you in this whole class, is that the number stays open until 4 o'clock. 4 o'clock in the afternoon, our time is 10 o'clock at night for the East Coast. So if you wait and call them at 3 o'clock, even 3:30 if you're, I've had them kind of figure out ways to get me off the line at 3:30 though. Anyway, you call them at 3 o'clock, 9 o'clock their time on the East Coast, all those people have already gone home, and there's not many people waiting in line, because this is not for the individuals, this is for the tax professionals. So you call the line at 3 o'clock in the afternoon, you get through in 5 or 10 minutes, even faster sometimes. You call the 9 o'clock in the morning, not so much. Same thing like on the state. You call the state at like 9 o'clock in the morning, you're caller number 22. I don't know if you've had that, or, I'm sorry, there's too many people waiting in line, call back,
later.
click.
Yes.
Okay. So, the CAF, you gotta know what a central authorization file, everybody calls it the CAF file. Okay, and you can have your TIA or POA in the CAF file. That way they can get it easy. Okay? Multiple representation. The IRS will provide copies of written communication and no more than 2 designated representatives. Yes, go ahead.
I just saw that the 2848 does not need to be signed by the taxpayer.
There's no such thing as that.
That's
No.
what it says right here.
Where are you on page 72?
Yeah, number 13, 1A.
A representative must file a tax information to receive or inspect confidential tax on behalf of the taxpayer. POA perform these duties. So the IRS will accept a POA.
No, where it says however, number 1, and then below that A, the form 2848.
The Form 28 must be completed, but it does not need to be signed.
No, that doesn't sound right.
Yeah.
That's not right.
I think that not's not supposed to be there.
That's not right.
It needs to be signed.
It needs to be signed, yes. It has to be signed.
Yeah.
Mm-hmm.
Oh, no.
Oh.
You're using a non-standard form,
Oh.
not a 2848. You've got all the information. It's signed. You still have to attach a 2848 to that form.
Oh,
Even-
okay.
Then
That
it doesn't
one
have to
has
be
to be
signed.
signed.
The
Oh.
non-standard form is signed.
Okay.
You had me going.
Sorry.
Okay. If the authorization is not limited, an individual can generally perform all the acts a taxpayer can perform. That's if what? Lawyers, CPAs, enrolled agents. Those AFA guys can't do that. In general, a representative can do all the following. There's your list, all A through F. You need to know that. That's all I can do is read it to you. An unenrolled tax preparer is limited in scope and appear before the revenue agents. Who is that? That's that after guy. He can only go in front of the revenue agents, which is called examination, and he can only go for the clients that he signed their tax returns and in the years we passed the AFTA exam. Okay? That's all that's been on there lately. For some reason they like those guys and they want to make everybody become an AFTA person. Okay. PO requirements. There's a list all the way A through H. What are the things you gotta have? All you can do is just make sure you're related. Okay. Change of authority. I think that's the same thing I was talking about earlier. A new POA is deemed to revoke the old POA, right? So that's one way to get rid of the old one. A new POA revokes a prior POA. A new POA revokes a TIA. But a TIA doesn't revoke a POA. I'm pretty sure that's right. I just did that off the top of my head. Okay, substitution. Unless it's written into the POA, you can't substitute. I get a POA from somebody, I can't tell Lynn over there, you go take care of this client. That person, when they filled out the POA, had to stipulate that. Okay? A properly executed POA declaration of representative does not permit the representative to make substitution of representatives. The POA must, however, state the intention to grant authority of substitution. And then they gotta have all that information in there. Partnership audits. Partnership audits are made at the partnership level. Special rules govern the proceedings that must be conducted at the partnership level. So, in the old days, up until, a few years ago, when you had partnership audits, they were individual partners getting audited. And they'd go ask them all the different questions on the partnership return. Now they go, that's not really, doesn't work very well, especially if you have a lot of partners. So now they go and have a partnership audit. They audit the partnership. And somebody has to be the representative for the partnership. And the partnership can have a POA. Partnerships audit, you guys just read that. I can either read it to you, that's about it. Notice the beginning of administrative proceedings and the resulting final partnership. Adjustments must be given to all partners, except those with less than 1%, and somebody has to be designated to give all those partners the information. They would have a tax matters partner. I don't know that you're gonna get any of that kind of stuff. I don't remember ever seeing anything that detailed. Okay, the CAF system. So, if for some reason I'm not on the CAF system, that doesn't make my POA not valid. I don't have, they can't, the IRS says, well, we can't find your POA on the CAF system. It doesn't matter, I got it in my hand, I'll fax it to you. It's just as good. That's been a question a lot of times. So yeah, Sam didn't even get a CAF number until a few weeks ago. Finally, I browbeat him into going and getting one and getting signed up, so he can, with a POA, he can go get everybody's transcripts. You guys are all familiar with getting transcripts. It's like the best thing since sliced bread. It's a good thing to do when you really need it, because some of our clients are less than perfect. and they go, well, what did you do back in 2016, 15, 14? I don't know. Did you file? I don't know. And they say things like that. In fact, I just had somebody send me tax returns that they'd finally gotten off TurboTax, like all the way back to 2011. But the reason I am, they had a rental property. Did you put it on your tax return? And they literally says, I don't know, I don't remember. And so when they recapture their depreciation, when they sell their rental property, well, if they hadn't been taking depreciation, there's this form called 3115 that they can fill out and take the depreciation now in the year of sale and save them a lot of money. But if they go, I don't know, it's challenging. Okay, so we're getting close to the end of this chapter. So something that shouldn't even be in this chapter is accrual accounting versus cash accounting. We've already gone through that in part 1, but we'll go hit it again. Here's the end of the year. Cash accounting. If I pay my expenses in the year 18, 19, if I pay the expenses, okay, in 18, they go in 18, right? If I don't pay it on cash accounting until 19, they go in 19. But in accrual accounting, if I get the debt, I go to my hardware store and go, I need a bunch of supplies, and they give me a bill, and I don't pay the bill until 19, but I got the supplies in 18. In accrual accounting, I got it in 18, so it's an 18 expense, even though I didn't pay for it in 19. Same thing with income. In fact, I had a guy that just did some, anyway. So you get a check on December 21st. This guy said December 21st. But I held the check until the next year because I didn't want to cash it. I didn't want to have to count it as income. And the answer is, if you're in cash accounting, no, it's income in 18. If you were in accrual accounting, it's income in 18, even more so. So for cash accounting, it's when you get the cash, when you constructively receive it. For accrual accounting, it's when you earn the money. I earned the money in 18. I really did earn it, but they actually gave me the check on January 10th. In that case, for cash accounting, that would be money in January, but in accrual accounting, it'd still be money. You guys should have already known all this, right? Okay, good. Hybrid, okay, when do you have to use accrual accounting? Sometimes when you have inventory. And if you have inventory and you have to use accrual accounting for your inventory, then you got to use it for your sales. But you don't necessarily have to use it for your other expenses. You could use accrual accounting for that part and then use cash accounting for your expenses. It makes it a little complicated. You have a hybrid method. Do I know anybody that does that? Most everybody I know are using cash accounting. And that's now as you get up with corporations, then you're going to be in accrual accounting a lot more. Okay, so that's the end of this. We got through this. These are easy chapters tonight. We're going, in fact, we've only been working for 35 minutes. Does anybody even need a rest break? Potty break? Okay, then let's go to the next chapter. Examination and the appeals process. Okay, so after you file the tax return, the IRS has got several ways of sending you letters and all this. We're going to go over the letters in just a little bit. First of all, the examination returns, computer scoring. They call it the div system. They used to ask you this one every time, and the trick is they'll say the lowest score is the one they audited. It's not, it's the highest score. So that's been a question. So you'll see under computer scoring 1A, returns selected from the div system have the higher score. So higher score means you got more likely to get audited. Let's say that you have a Schedule C, and the guy comes in and he looks at the ceiling and goes, my repairs were 1,000, my taxes were 2,000, my meals were 3,000. You get the picture? Supplies were 4,000, and he keeps all the numbers little round thousands. He's going to hit that diff score on just those numbers alone. Round numbers will get you in more trouble. It's not a guarantee, because some round numbers are just, if I pay $1,000 a month rent, I'm going to have $12,000. It's a round number, but it's the truth, assuming they didn't pay their GE tax. In most cases, for most things you buy, somebody's going to charge you GE tax, so it shouldn't be round numbers. Okay. Okay, third-party information. This is another one. This is going to be there for sure. This is the CP2000s. So the guy comes in to do the tax return. He gives you his W-2s. He gives you his interest, his dividends. But Charles Schwab forgot to send him 1099-B. He'd sold a bunch of stock. Well, he lost money on the stock, so we go, it doesn't matter. So in his own mind, he doesn't put that down. I get this a few times a year.
Yeah.
Okay, so he goes, well, it doesn't matter, I lost money. Wrong, because the IRS, sometimes now they're getting the basis, but most of the time, they don't always get the basis. They got, you sold stock for $10,000. They don't know the stock cost you $11,000. So they're saying, you left $10,000 off your tax return, you now owe us a couple grand. Okay? They're getting that from a third party. Okay, that's the way they do a lot. The CP2000s are one of the,
CP2000?
it's called the CP2000. We have, in a couple of pages, they're gonna have a list of all the CPs when we get to page 94. Okay.
So what's
CP2000, it, I don't remember. I've just been CP, all the CP numbers. Those are the numbers of the letter. Correspondence, correspondence, and they're all just a letter number. Okay, so what is it? What are the other ones that would happen like that? You forget to put a W-2 in, or what we see a lot of are 1099 miscellaneous. And the guy comes in, 6 months later, he goes, but the guy told me that I was working under the table, that I didn't have to count that. And you go, well, that guy's accountant told him that he was going to get in trouble if he didn't put out those 1099s. And so the guy snitched him off. And so he was going, well, I worked cheap. I wouldn't have worked that cheap if I'd known I was going to have to pay taxes. It's hard to be sympathetic in that case because they were trying to get out of taxes. But we just help them the best we can. And all you do is help them reconstruct their expenses and make sure they understand the famous rule that I learned in tax class. Pigs get fat, hogs get slaughtered. If you're greedy and take too many expenses, you could be in trouble. And if you just stay along the line, you're probably not going to get in a lot of trouble. What do you do if the guy comes in and doesn't have anything written down? This is new that I just got through coming back from Vegas. You better make him go back and write down his expenses and say to you, I can prove these expenses. If not, you could be liable for a 20% penalty. Everybody getting that one?
Mm-hmm.
So, You gotta, and don't let him sit there and look at the ceiling and go and tell you numbers, even if they're not round. That's not okay. So you gotta make them write it down. And you don't let them, this is my personal opinion, if they sit there right in front of you writing these numbers down, you know that they're committing fraud, and so you're, possibly if they go, well, he saw me write them down, uh-oh, not good. All right, so, other contacts, reasonable notice before contacting other persons. Okay. So, the IRS looks at your tax return and go, we want to talk to some people about whatever. Usually, they have to give you reasonable notice, and you get to maybe say, wait a minute, let me straighten this out before we go. Telling my boss, you know, that I'm under investigation by the IRS. I had a lady this year that was scared to death. She works for a bank. And she knows that if the bank starts garnishing her wages, they're gonna fire her. I don't know if you guys have ever had any, but you're actually not supposed to, but banks may have other concerns. You have to be honorable enough to be a banker.
What would she have done wrong?
She didn't pay her taxes.
Oh.
She owed a bunch of money and she put her head in the sand, waited a few years. Now she owes a bunch of money and some penalties and interest. And she comes in here and goes, help. And so we called the IRS, get it straightened out, and eventually we got her a installment agreement. So she never got a letter at her place of work going, give us all her money. It wouldn't have been all of it, but it would have been a good nice chunk. Okay, they're here down at the bottom on page 91. It goes under A. These are the times that they don't need to give you notice. If it's a criminal investigation, if you're a Colombian drug dealer, they don't have to tell anybody. They can just go start investigating. If it would jeopardize collections, if they told somebody that you were in a partnership with and they knew that person was going to run away or something, they might, because they're also guilty, they might not do something like that. Okay. Or if you're an axe murderer and they think you might go chop up the person they talk, your neighbor next door, then they probably wouldn't want to do that. Hopefully you don't have clients that are axe murderers. Maybe. Okay. Prior to the initial in-person interview, the officer and the employee of the IRS must provide the taxpayer an explanation of the audit and a publication one. Does everybody know what publication one is? It just, it's publication from the IRS that tells you all your rights. And they give them out a lot. Okay, so what does that mean? The IRS, before they have, you have an in-person, your initial in-person interview, they got to explain what's going on. So representation, you may work on your own behalf. You may have somebody working for you. If a joint tax return is filed, they've just changed this in the last few years. Now, if you have a joint tax return with your wife, in the old days, you and your wife could do a power of attorney together. Now you each have to do your own power of attorney. You can't have the same guy be working for both of you. Okay, you file joint. That's not a conflict of interest. But you got to do a power of attorney for each of them. And let's say you want to find out their wage and income information on a transcript. Well, you got to have both power of attorneys, because if you go in there with this one guy's power of attorney, they won't tell you what happened to his wife.
Is that for 2018 or starting?
That's been going on about 3 years now, maybe 4.
Sorry, so they can have the same person?
Yes,
Power
that's
attorney,
not a
but
conflict of
two
interest.
forms of-
But you gotta, yes, you gotta have 2 power of attorneys. Send them both in. Okay, so examination location, normally where you have the examination, where the person lives, where their documents are, that kind of stuff. The trick question the IRS does on these tests is normally if I did my tax return in Kansas City, but I moved to Hawaii, I get to have the examination in Hawaii where I live now, right? Mm-hmm. If I had all my books and records and everything there, and my representative was in Kansas City, we could have it still in Kansas City. On the other hand, I live in Kansas City, all my records are in Kansas City, but I want to use a guy in Hawaii that's, he's the best crook in town, or he's a real good lawyer, let's say, that he fights for his clients. No, I can't do that. That's the trick one. It's got to be for you, your records. You can't just have it for your representative's sake in another place. Everybody got that one? That's the trick question they give sometimes. Okay, jurisdiction. They don't say not to prepare, but that's the trick question. It's there. Maybe it's somewhere else. Proposed changes. If the IRS examiner proposes any changes to the taxpayer, the IRS examiner will explain the reasons for the changes. If the taxpayer does not agree, he can meet with the examiner supervisor. And I tell you guys, that's the easiest thing to do. Go, if you get somebody that's just being a little bit too unreal, just real quick, just go, can I meet with your supervisor? Before you go any farther, and sometimes the supervisor will give you at least some of it, okay? They may not, if you're saying, my client drove his car 20,000 miles and he works for McDonald's, that's probably not gonna work. Unless he works in many locations, okay? On the other hand, if he is in construction and you go, he worked in many locations and we can show, he has something to show that, you know, that I worked in many locations. He's only got one W-2, so it's gonna be, you know, won't be so, but he can prove I did this. He may not have. I personally keep a calendar the old-fashioned way on where I go every day. I have a hard time getting my clients. I buy at least 30 or 40 calendars a year and give them out to people. Will they do it? Not necessarily. A lot of them don't. So what do you do if they come in? If they don't have a written record of their mileage, don't have a mileage log, you could be in trouble. They're supposed to have a mileage log. So you need to help them construct it, or at the very least, they have to tell you that I have a mileage log, these are my numbers. And if they don't come in with those numbers written down, and they just try to say, I drove 10,000 miles for work and 15,000 miles total, don't do that. You're putting yourself at risk. And I know I had a lady back in Vegas tell me that if somebody doesn't have their records written down, she just throws them out of the office. That's a little harsh. But she's the one that wrote the book on, what is it called? Best practices.
We have a CPA like that. She says, no, that does not add. Take it home, bring it back.
Well, okay, and I'm starting to do that more and more. Take it home, bring it back. Mm-hmm. And when you get back, you go, do you have proof to back up these expenses? Yes or no? Mm-hmm. And you need to write down in your notes, client Bozo told me that he had proof to back up his notes. He even honked his nose to just kidding. Okay,
Sometimes she makes them bring the whole thing, the proof, okay?
and if they bring you this proof, you need to document it. Document it how? Scan it into your files, make a copy or something.
Mm-hmm.
Personal opinion, everybody gets to do this their own way, but if you go to all this trouble to pass these tests, it's in your best interest to keep that license and not lose it.
Mm-hmm.
Okay. Proposed changes, revenue. So, you meet with the revenue officer, you talk to his supervisor, and they go, and this is what we're gonna do. So they have to give you a report called Revenue Agents Report, RAR. It's called the 30-day letter. And it goes, these are what changes we wanna do. And you can either agree to it when you get the letter, okay, that the payment is not made when the agreement is signed. If right when you get the letter, you can sign the agreement and say, okay, I agree, I owe you this much, and you can pay them. Then everything's over. But if you don't agree, you have within 10 business days of the billing date. If you pay them within 10 days, no more interest. 21 days if it's less than 100 grand. Everybody I know is 21 days. Can I turn this on? It's starting to get a little hot. Tell me if it blows on you guys, ladies, if I put too much. Okay, taxpayer must pay interest on penalties and on additional tax. So, if when they assess this extra money, they go, you have a negligence penalty, 20%. Or fraud penalty, they really don't like you, 75%. Or fraud penalty, and they say this is frivolous, we're gonna charge you $5 grand and 75%. They're really not happy with the way you're doing stuff. Okay? So, but at any rate, you've got these penalties are on top of it. The interest that is starting to accrue, so you've got to pay interest at that time or from that time on until you pay the whole thing off. And you have to pay interest on the penalties also. What are you doing like that? Of course you do. Have you had any clients that the interest and penalties are as much as what they really owe?
Mm-hmm.
Especially with the state. They're brutal.
Yes, they are.
So, we're getting off a little bit, but you know that we're getting ready to come up till next week. So everybody, they've had extensions and they come in and they pay. Well, so for not paying, it's 0.5% per month. Okay, so over 6 months, we'll say 3% and interest. But if they go past next Tuesday, they're also have not filed. Okay, so it's 5% a month. That's 25% plus interest. Big difference. And the state's already gouging them. You know, you get a free.
They collect me for that railroad track.
Yeah. The state says that you can file an extension. It's an automatic extension with the state, but they don't tell everybody that automatic extension doesn't come with an extension to pay. Neither one of them. And so, but they've got a 20% kicker in there. I think it's, I can't tell you off the top of that look at it. But I looked at it, it's just going, that's brutal. So, anyway, the state's nasty. They're mean people. Not really. They're just doing their jobs. Okay. So the state, the interest is figured from the date that the tax is due until you pay it, right? Abatement. This is the other good thing that I want to tell you about. First time abatement. You can ask for an abatement if you've got certain rules. We're going to go over abatement. First time abatement. This is something I found out. You've got a client, they've not been in trouble before, but they did something wrong. They took money out of their 401k, didn't file their tax return for 3 years, because they didn't want to pay all the money. Wrong way to do it. But it's too late. They came into you this year and wanted to file all three. So that first year where they had the big penalty, the big amount due, you can ask for first-time abatement going, they've been good people, they got behind, they made a mistake, I would like to ask for a first-time abatement. And you can get the penalties for that first time, and you want to take the big one and knock them off. First-time abatement, you still got to do it. I don't know if it's, by then they might be in the under-reporter program, they might be, who knows where they are. But that's, you got to write to whoever it is. Go online, find out where they are, and do that. Okay, so let's talk about abatements. The IRS may abate or reduce the amount of interest if the interest is due to an unreasonable error or delay by the IRS. That doesn't happen so much. This first-time abatement you can get one time. What happens if you have been a jerk and been doing this off and on? You don't get a first-time abatement. Okay, and so if the IRS made a mistake, you can ask for an abatement. If ministerial or managerial act on the IRS is wrong. Basically, just read the abatements. I'm not gonna tell you anything else. If they owe you some interest and you owe them some interest, they'll net those two out. Generally, you get less interest than they get, so they're gonna still win that reward. But let's say that they're charging you 5% interest, but they owe you 2% interest on something else. Well, then net those things maybe, and they'd only get the difference. They've had that as a question before. Okay, here's the thing that really matters. When the taxpayer has already paid the tax, you can file a Form 843, must be filed within 3 years of when you paid it, or 3 years of when it was filed, or supposed to have been filed, and 2 years of when you paid the money, whichever is the latter. So, if I paid all the money on April 15th, then I got 3 years. But if I didn't pay the money until 4 years later, well, that 3 years is already gone. I got 2 years from when I paid the money to ask to do an amendment, maybe ask for a refund. Or the 843 and ask for some of the fees back.
When you ask for an abatement, do you recommend the taxpayer to pay the tax and penalty, and then you're gonna send a letter and wait?
In my case, with most of my clients, no. But I'm not doing it on the 843. I'm doing it because they really owe the money. They don't have the money to pay. We're trying to get out of some of the money, and we're also talking to them, trying to get installment agreements. And if we have a reasonable reason why they didn't pay, even if it's I took a bunch of money out of my 401k and blew it. I wouldn't tell them if you went and blew it in Vegas, but just say, I spent the money, I'm sorry, I made a mistake, I didn't realize how much tax it was going to cost me, yada yada. But I'd like to get straight with you guys. Could you see your way, this is my first time, could you see your way to abate my penalties and let me just start paying you and get even with you? I've had 2 times in this summer that it worked. You have to write a letter. Oh, out of maybe 4, half the time. You don't get those situations all the time.
Right.
It has to be somebody that's been paying their taxes. This is the first time this has happened, or at least in a long time.
So the other 2 that got denied,
I don't
it
know.
accrued interest on top of the penalty.
Oh,
that
they had
was-
multiple years. They had lots of years of doing bad things.
So you risk accruing more interest.
No,
No.
It's not gonna ever get any more. It's only gonna get less. So, it's only gonna work for somebody if it's their first time they've got a problem. Or first time in 10 years, and the IRS doesn't go back any farther. So you could have had a problem maybe a long time ago, and the IRS, their computer records don't go back that far, you might get away with it. I don't know that part. Okay? Notices sent by the IRS, here we go. These are the CP notices. A CP-12 is a change to a tax return. Okay? You just read this stuff. All I can do is read it to you otherwise. CP-12, normal. It might mean there was just a math error or something like that. CP-14, balance due, no math error. There might be some reason. CP-49, overpaid tax applied to other years. We see that a lot more. The guy's supposed to get a refund back, and then he gets a letter from the IRS going, oh, thank you for that refund. We're using it for your 2005 tax return that you probably forgot about. Happens regularly. But it's a lot of times even more recent than that. 13, 14, they just, oops, they didn't tell you. And do you guys know what bank products are? Where you can have the fees deducted for the client on their refund from a bank. So the client's going to get a $4,000 refund. You're going to charge him $200 to do the tax return. So you deduct that $200 from his refund by sending it to a bank. The bank deducts the fees and then deposit it either in his account or send a check to your office and you get it. Everybody familiar with that? Maybe? No? Okay. The people that owe money, a lot of times will want to do that because they get out of paying their fees up front. And then when the IRS takes the money, they just keep going to a new tax preparer year after year until they've run out. And they forgot that they go. So they went to H&R Block, they went to Jackson Hewitt, they went to Hanks. Then they forgot that they go back to Jackson Hewitt, and Jackson Hewitt doesn't forget. Our computers remember this stuff. And they go, oh, you did not pay us last time. We'll just take it out of your pay.
For the service that.
We used to, the banks would do that, and we used to could do that. Now there's a new law in the last couple of years saying you have to tell them if you know they owe you money. So you got to tell them up front so they can walk out. The banks wouldn't do that. The banks would let you go ahead, apply for the loan, and then they grab all your money because you had cheated the bank. Okay, so final notice, CP-90, final notice, intent to levy, or notice of your rights to a hearing. So what does that mean? They're going to levy you. Everybody understand what levy means? They're going to go take some of your money, some of your property. A lien means they're going to put a lien against your property, so when you sell it, you have to pay them before you get your money. Levy means they're going to go take it. The levy that gets more people is they go to your boss, they go to a judge and they send him a letter, say, hi, we'd like for you to take so much money out of Joe's account, out of Joe's paycheck. Remember I told you about the lady that worked at the bank? She was scared to death of that because she said the bank would fire her before they let that keep going. So, but lots of people have that happen.
We have people that, they come in and say, can you talk to the bank so they can, no, can you talk to the IRS and remove the levy so we can sell the house and pay the taxes?
Okay.
How can I say?
So we did CP-90, now CP-2000. CP-2000 is the one where you left something off your tax return, you forgot that you worked for McDonald's for 2 months, and it wasn't a big deal, but you forgot. or you forgot about selling some stock and didn't put it on the tax return, or you were working on the side in construction and your boss told you that he wasn't going to give you a W-2, and then his accountant talked to him and he decided that he was going to snitch you off to the IRS. Okay, you get a CP 2000. We see them regularly. Sometimes you don't owe it. Another one is with 1099-Rs. So a gentleman came in and he was talking about something. He came in with a letter from the state and he goes, yeah, I called you up and told you that I had an IRA that I didn't put on my tax return. And I said, go ahead and pay it. If you have an IRA, you're under 59.5, you own the money. And then he comes in and shows me the IRA was a Roth IRA. He had made contributions higher than the amount that he took, and so we amended his tax return and got it back. But when he called me that a year ago, he didn't mention Roth IRA. He just said, oh, IRA, and I took the money out. Yeah, I did. Too bad, so sad, man, you owe the money. Which was, I normally say, come on in, let's talk about it. He lived out in Eva and didn't want to come in. So I've learned anew something, that maybe you got to make him come in going, we shouldn't be doing this over the phone. But now he's a happy guy.
What if it was not a Roth IRA?
He would have owed the whole thing. If it was a regular IRA, yeah, and he didn't put it on his tax return, he owes it, plus the 10% penalty, plus the reason he came in is because the state sent him a letter for the same IRA. And he brought me in the paperwork that he had gotten from the IRA months late. He didn't get it until after he had filed his tax return. So he didn't think it mattered. Just let it go. Wrong answer. If he would have come back in right then, we could have fixed it. He wouldn't have owed anything. But what we had to do was send in the 1099-R. We had to go back to the Ameritrade, get all his contributions, add them all up together, show that it was more than he put in. Like I think he took out $8,000, he put in over 10. So he didn't owe him any money. So life is good. Okay.
So as far as the test, do we memorize the CP number and the description, or?
Yeah, maybe for the test.
Just these?
Uh-huh.
Are there more than?
Yes.
But that's what they're telling us to remember.
Yes. That's what this book is saying. Do they do that? They don't usually do. What is CP 49? CP 2000, a lot of times I've seen that on the test, but that's the only one that I really remember. I don't think they're going to do all of that, but you have to know that if you get these kinds of letters, what they are. And if you get a client with these letters, the quick answer is always have them bring the letter in and let you read it. Because listening to your client describe it, as I just found out, was not a good thing. Audit reconsideration, we've already talked about it, but so you have a client that he doesn't file his tax return. They file one for him. That was maybe this was some 3 or 4 years ago. So they've already sent him all kinds of letters and he just ignored them. Well, finally he comes in and goes, help. And so you would say, okay, you look at his stuff and go, well, you dummy, you didn't really owe that money. Say it was like that 1099-R that I was talking about, a Roth IRA, or it was a Schedule C 1099, and he didn't put down any of his expenses, and he had a bunch. Well, then if he has some record, if he kept his receipts, good luck with that. Or he can get his bank statements or his credit card statements that says, I'm in construction, I went to Home Depot all the time, and these are my expenses that I use, and this is when I was working, where I was working. He can reconstruct this and get a lot of those expenses. Now, if he has nothing and he just looks at the ceiling and go, oh yeah, my expenses were $5,000, not so, that won't work so well. So audit reconsideration. So there's just a list of things. Here's when it will be accepted under B. It won't be accepted under C. You need to know those 3 things on each of those. And here's one: moved and did not receive correspondence. A lot of people actually, that is the truth. They move and they don't get all the correspondence. It didn't get forwarded. Appeals within the IRS. Okay, so you first get your 30-day letter, then you're going to get what's called a 90-day letter. We're getting ready to go over both of those. So you get the letter, the IRS says, no, we don't agree, you owe us all this money. And you go, no, I don't really think I do. Okay? And what do? Well, you're going to get a 30-day letter, and what you want to do is, I want to apply for an appeal. And there's 2 kinds. One of them is under $25,000, one is over. There's a list of all this stuff that has to do with all this. Okay, if it's under $25,000, you don't have to have a formal written protest. Doesn't have to be submitted. If it's $25,000 or more, or it's a partnership or an S corp, then you have to submit a formal letter, and it's got all of these things that are going to be in there. If they give it to you, you just got to memorize that. That's about it. Okay, so you get a 30-day letter. You're supposed to answer back in 30 days, right? So you don't answer back, then they send you a 90-day letter. You have 90 days to apply to tax court. If you apply to tax court, you're supposed to have already gone through appeals first. And I'm not sure if there's a way to get out, but normally you go through appeals. If you don't want to go through appeal and you want to go straight to tax court, you say, I want to waive my right for the appeals court, and I want to go straight to tax court. Okay? So, if you don't file you don't petition to go to tax court, it's not filed on time, the tax will be due in 10 days, and the case cannot be taken to tax court. So, I have this all the time. People come in, they bring you a whole pile of letters. They're 2 years late. And they go, what can you do for me? Well, normally what I would do is ask for audit reconsideration. What is the reason you don't owe them the money? I spent it is not a good reason. Let's say I have never taken anybody to tax court in the last 30 years. I don't have people with that much money that can afford to go to tax court. If you owe, you definitely have to owe over 25 grand, or the lawyers would eat you alive. Any of you guys got big clients? You got some? Got some? If you're working with CPA firms, you could easily have them. Mostly we don't. So this doesn't really apply. So you go through the appeals process. Okay? You're not going to get complex tax returns about tax courts. We're going to go through the kinds of tax courts in a minute. Okay, so we go repetitive review. This is one they always have on there. So you have been doing this tax return for 3 or 4 years. In the last 2 years, they brought up the same stuff over and over again. So if they're doing, and then the last 2 years, they didn't find anything wrong. Let's just say it's mileage log. They looked at his mileage log. It's a good mileage log. It's just he's got a lot of miles. if you were, let's say you were working in construction in California, LA, well, you might be driving 100 miles a day. So you could drive 25,000 miles for business, something like that. And maybe because you get home after all that driving, you don't want to drive much, so you have your spouse do the driving. Or you have more than one car. You have a big old truck that you drive for work, and you have a little cheapo car that you use for personal. But the IRS doesn't know that, and they've audited you. So you go, what do? You go back to the IRS, send them a letter and go, hi, you've been auditing me for this for the last 2 years. Would you go back and check it out? They don't have to let you off, but if they go back and check it out and they see that it's reasonable, that you've run these same miles, they checked it out, a lot of times they'll close the audit. Right now, when you go call them, they'll suspend the audit and they'll say, let us check. Everybody know that? That's a question every time. Okay? You should notify the guy doing the audit. They will suspend it. They'll go check it out. And if everything's okay, they might just cancel the audit. If, on the other hand, they've done this audit 2 or 3 times and they find stuff wrong every time, well, they're going to go, no, we're going to go do this. Okay, statutory period, we've already talked about it. What do you got, 3 years? If you want to get your refund back, you've got 3 years to file, or 2 years from when you pay. What happens if you owe them money?
Oh, forget it.
That's it. It's if you owe them the money, you owe them. If you don't file for 10 years, there is no statute of limitations when you don't file. There is a 10 years statute of limitations, say, from when you file to when they can collect. Okay, there's some rules that go along with that, but generally, so if you've got a guy that says, I owe money from 2005 or 6, your first question is, when did you file? And if he filed say from 2005, and he filed in 2006, then next answer is go to the IRS and go, hi, has this 10 years passed yet? I've actually made a couple of good friends by that.
Can imagine.
A fisherman, this was years ago, he he'd been running from the IRS off and on for 20 years. He had filed his tax return, but he never paid them. He was self-employed fisherman. He owed every year. He came in and I go, well, these are all more than 10 years old. It was a half a dozen. And lo and behold, he had filed them. He'd just been, fishermen are hard to catch. You know, he was actually from Boston, and he'd come out here. And he had been in Florida, I know, and other. Anyway, so he got out of it because it had passed the 10 years. It doesn't apply if you never filed. Okay?
Okay.
Special rules for partnership audits, they call it TERFRA. Now that they're taking partnership audits and auditing it at the partnership level, not at the individual. Just read this, you're not going to get, maybe you'll get a question on it, but you won't get more than 1, 2 at the very most. Bipartisan Budget Act of 2015. Same thing, just read that. I can't tell you anymore. Okay, so here's on page 100, here's a list of the courts. One of the questions they might ask is, which court can they go to? Well, they can go to any of these courts, but the only court you can go to before you pay the money is tax court. So if you go to the U.S. District Court, the Court of Federal Claims, you're supposed to pay before you go. And none of these things are for my kind of clients. Why? Because the lawyer fees are going to be so high. Then after that, if you don't like it, you go to the appeals, then the Supreme Court. After filing a petition with the tax court, the appeals office will have exclusive settlement jurisdiction for the next 4 months. Before you go, the appeals office may be going to talk to you and say, hey, can we work this out? This is an expensive one. And maybe not. The tax court hears cases before any tax has been assessed or paid. Okay? In order to petition, the taxpayer must first receive notice of deficiency. So, if you haven't received your 90-day notice, you got to ask the IRS, would you send me the 90-day notice so I can reject it and get on with our business? What are the ones, this is another one they're going to have. What jurisdiction is for the tax court? Income, estate, and gifts. What is missing? Employment taxes. They don't do, tax court doesn't do employment taxes.
Where do you go for employment tax?
Jail. Just kidding. You normally handle that inside the IRS. I don't know if you can go to the other courts probably. The employment taxes is the worst penalties. You know that they call it the death penalty. It's 100% penalty. Okay. It may be in this chapter. If not, it'll be in the next one. Okay. Small tax case. Okay, so if you have a small tax case under $50,000, that's a lot of taxes, but they call that a small tax case. You can be held in small tax case division. What does that mean? If you're approved to that, they'll handle it under their procedures. Okay. What is it? Okay, if it's handled there, then it can't be appealed. That's the drawback. So whatever they decide, that's it. There's no appeals. Okay. Who can practice before the court? Only lawyers and like enrolled agents of CPAs. I think anybody, if they take an exam and can show competency. Not so sure anybody's going to do that much, unless you get a like savant with a photographic memory. Okay. Non-acquiescence. Okay. Acquiescence, non-acquiescence. If the tax court or any court makes the decision, the IRS has to acquiesce, means they will agree with it and abide by it in all of the different tax court areas. It's not called areas. What are the different courts? Like we're in the 9th Circuit. Whatever this, I guess circuit is that. Okay, so if we in Hawaii win a court case, the IRS gets to acquiesce, say they agree, okay, you guys will abide by it everywhere. Or they say they non-acquiesce. We don't agree to this. We only agree to it in the 9th Circuit, California and Hawaii. We get to fight it again in some other places. After they lose a couple more places, they will probably agree to it. Or they win it in another place, then it's could go very likely to the Supreme Court, because you have different decisions in different circuits. Okay, non-equity, that although the decision was not appealed or was not reviewed by the Supreme Court, the IRS does not agree and will not follow it nationwide. That's what non-acquiescence. Now, if it goes to the Supreme Court and the IRS loses the Supreme Court, you get to go, and you win. The IRS has to abide by the Supreme Court. It's only if it doesn't get to the Supreme Court. Of course, I wouldn't be doing that to the IRS, because you might have to see them again someday. Okay, decision types. They're not going to have a lot of this, but you guys got to just generally know it for the test. In real life, I never come up to this stuff. So regular decisions involve questions of law, memorandum decisions, a question of fact. You know that for the test and then forget it. District courts are federal, courts of federal acclaim. Claims are, the tax has to be paid and a claim for a refund has to be filed before you go to those. So you pay the taxes, you owe $25,000 or $100,000, a big corporation. You pay the tax, you file for a claim, so the IRS says, filing for a claim, I want my refund, my taxes back. And the tax, they don't get, they either deny it or they wait 6 months and don't get back to you, then you can file in these courts. How long do you have to do it? 2 years, that might be asked. A trial by jury is available in district court, but not in the tax court. So you might want, that might be a reason you'd want to go to a tax court, pay it and go to a tax court, is that you want a trial by jury. You go, all the rest of the people here don't think that's bad. The IRS would not be, you go to a place the IRS is not like. Anyway, okay, penalties. We're going to go real quick. We've already gone over penalties. You're going to see these again. Negligent penalty, 20% penalty will impose on the taxpayer for understatement of tax due to negligence. Okay, fraud penalty, 75%. We've already gone over this before, but this doesn't hurt. 75%, if they commit fraud, frivolous, in addition to the other penalties, they can be charged an extra $5,000. And we've already gone over abatement, just read that. Reasonable cause, the amount of interest owed may be abated if the IRS, if the interest is due to unreasonable errors and delays. Basically read that, interest abatement, and that's it. Now, next week, we've got 3 chapters left. Do you guys want to take 2 chapters next week and the following week do the last chapter and a review? How much are you guys going to be taking the test? Have you even taken one? You're getting ready to any day now?
Getting ready to.
Okay. Do you need more time, or do you want to, I can hurry up or slow it down to fit what you want? Have you taken the test yet?
Schedule.
Okay.
Don't freak, yeah. freak
You're
out.
taking one though, right?
Yeah.
Okay, so how about next week we'll do the next 2 chapters, and the week after that we'll do 1 chapter and a review.
Sounds good.
Because that way we don't have to pressure you guys. And then you're going to tell me if you